Welcome back, everyone, to another deep dive.
From AI-inspired insights from farmers.
If you're enjoying what we're doing here, we'd love to hear from you too.
Absolutely.
Hit that like button, subscribe to the channel, and definitely leave a comment telling us what you want to see more of on this deep dive.
We're always looking for new ideas, and we really value your feedback.
So what farm-related mysteries are you dying to uncover?
Right.
What questions are keeping you up at night? Let us know, and maybe we'll tackle them in a future deep dive. Welcome to this deep dive. Today we're going to unpack the evolving world of agribusiness. We're looking at what's really crucial if you're maybe thinking about starting a farm.
Yeah, and we've sifted through quite a stack of sources, market reports, financial stuff, investment guides.
Right. The idea is to pull out the key info, the trends that someone new to this field really needs to know.
It's a huge market we're talking about.
Huge. Valued at, what, USD 3.4 trillion this year, 2024?
That's the figure, and expected to hit maybe USD 4.4 trillion by 2033.
And North America has a big slice of that pie right now, over 41%. So let's get into it.
Okay. Well, there are a few big things driving this growth, and understanding them is, I think, pretty vital for anyone looking to get started. Our sources really point to, first, this huge increase in global food demand. Then there's the rapid tech advancements, and also a growing focus on supply chains, making them resilient, sustainable. And finally, market consolidation. Those are the main forces.
Okay, let's start with that first one, food demand. It seems logical, right? More people, more food needed.
It does, but the specifics are interesting. Like India just launched, I think it was 109 new crop varieties.
Yeah, high-yielding, climate-resistant ones, a direct response, really.
Exactly. And then you see things like vertical farming popping up. There's a big facility launching soon, promising much higher yields, using way less water.
That's innovation right there.
It is. And this demand is really clear in the grain sector. It holds the biggest market share, about 36.9%.
Right, for food, animal feed, biofuels, it's central.
So naturally, there's a lot of investment going into boosting grain yields and, making the supply chains more efficient.
So for someone thinking about farming, it's like, okay, there's pressure to produce, but also these new ways opening up.
Precisely. The innovation in climate-resistant crops, vertical farming, these show pathways for new folks, especially if they focus on efficiency, on managing resources well.
And while grains are dominant, maybe there are opportunities in more specialized areas too.
Could be. Supplementing that core need,
Okay, let's pivot to technology then. The sources really hammer home how transformative tech is in modern farming. Precision agriculture, smart farming, these terms keep coming up.
They do. And for someone new, precision agriculture basically means using tech to optimize, well, everything. Crop production, livestock.
So what does that look like practically?
Well, imagine tractors guided by GPS for super accurate planting, or drones flying over your fields, spotting problems you might miss.
Okay.
And IoT sensors, little devices out in the field, constantly monitoring soil conditions, temperature, moisture.
So you get real-time data.
Exactly. It lets you target interventions, put fertilizer or water exactly where it's needed, when it's needed. No guesswork, less waste.
And AI comes into this too.
Yeah, data analytics and AI help make sense of all that information. Combine it with weather forecasts, market trends. It helps farmers make much smarter decisions.
The numbers seem to back that up. The U.S. precision farming software market is projected to hit over $1.6 billion by 2032. That's serious growth.
It really underscores the shift.
It sounds like this tech could actually help smaller, newer farms be more efficient, maybe compete better.
I think so. And beyond data, you mentioned automation. Automated irrigation, for example, is huge for water saving.
Right. And agricultural robotics.
Yeah.
Autonomous tractors.
Yeah, that market's growing fast. Projected CAGR of 15.4% from 2025. Think autonomous tractors using machine learning. It addresses labor shortages, boosts efficiency.
Less manual labor needed, potentially operating around the clock.
Precisely. And biotechnology is also a big player here, developing crops that are tougher, yield more, maybe even have better nutrition.
So if you're starting out, you really need to get a handle on these tech options.
Absolutely. It's key for deciding your approach where you invest.
Okay, let's talk supply chains. Reliability seems to be a huge concern. The sources flag supply chain or distribution failure as a major risk.
It really is. The journey from farm to fork is, well, incredibly complex now.
Even for smaller players.
Yes, the sources emphasize that even small food processors often rely on global networks for ingredients, packaging, equipment. It's all interconnected.
Which makes it vulnerable.
Very vulnerable to, political issues, trade disputes, natural disasters, labor shortages, even things like digitalization challenges and climate change impacts.
And recent conflicts, like in Ukraine or the Israel-Hamas situation, they amplify this, don't they?
Definitely. We saw big impacts on commodity prices, grain, rapeseed, sugar, fertilizer. It sends ripples everywhere.
So given all that fragility, what are businesses doing to make these chains stronger? Blockchain came up in the sources. How does that fit in?
Blockchain offers a way to get much better transparency and traceability.
How so?
It creates a secure, unchangeable record of a product's journey, from the farm through processing, distribution, everything.
Ah, so you can track it precisely.
Exactly. Which is great for food safety. You can quickly pinpoint contamination sources. It also helps reduce fraud and builds consumer trust. They know where their food came from.
So for a new farmer, being part of a traceable supply chain could actually be a selling point.
It really could. It assures buyers about quality and origin, potentially giving you an edge.
Another big trend that kept appearing is sustainability. The demand for organic, sustainably produced food seems to be really taking off.
Oh, absolutely. You see it in the sales figures for organic food worldwide. Consumers increasingly want stuff that's eco-friendly, ethically produced. Health concerns play a role too, of course.
And businesses are responding.
They are. They're shifting towards things like regenerative farming, getting organic certifications, cleaning up their supply chains.
We saw examples like Nestle working on emissions in their cocoa supply chain.
Right. Or Kate's Real Food launching a new organic snack bar this year. It's
Yeah.
happened across the board. Major companies are setting sustainability goals, expanding their organic lines.
So for someone starting a farm now, focusing on sustainable or organic methods seems like a smart move, tapping into that demand.
It definitely looks that way. It aligns with where the market seems to be heading.
Are there downsides or risks associated with this ESG focus that newcomers should know about?
Well, a couple of things. The sources mention increasing regulations and disclosure requirements around ESG policies.
So more paperwork, more rules to follow?
Potentially, yes. You need to stay informed and compliant. And then there's the risk of greenwashing.
Claiming to be sustainable without really being sustainable.
Exactly. So for a new farm, it's really important to be genuine about your practices, be transparent. That builds trust and avoids problems down the line.
Okay. Now, the sources also talked quite a bit about mergers, acquisitions, consolidation in the sector, big companies getting bigger.
Yes, that's a definite trend.
What does that mean for someone trying to break in? It sounds kind of intimidating competing with these giants.
It can be. The sources do highlight significant barriers to entry in industrialized agriculture. Land costs, resource costs, the sheer amount of capital needed, it's high.
And these big corporations, they integrate vertically, right? Control more stages of production.
They often do, which can limit opportunities for others. Plus, their influence on policy, subsidies, even research directions can be substantial.
So it's a tough environment.
It's competitive, for sure,
Yeah.
but it's also pushing those big players to innovate. They're adopting advanced tech, precision ag, robotics, AI, blockchain to stay efficient.
So maybe there's a silver lining that the whole industry is being pushed forward.
I think so. And many major players are also focusing more on sustainability now, like Bayer AG's Bayer Forward Farming Initiative in India, which emphasizes sustainable practices.
And we saw recent news about ADM expanding regenerative agriculture in the UK, ABP and Cisco doing similar work in Ireland.
Right, and Trelleborg Tires partnering on fuel efficiency, Nutrient Ag Solutions acquiring assets for biocontrol technology. It shows a broader industry shift.
So while large-scale consolidation is happening, there's also this simultaneous push towards tech and sustainability across the board.
Exactly. So for a new farmer, maybe the path isn't direct competition on scale, but finding niches, using sustainable methods effectively, leveraging technology smartly. You can find ways to compete or even collaborate.
Understanding what the big players are doing gives you clues about where the market's heading.
Precisely. It offers valuable strategic insight.
This has been incredibly useful. Now, let's move to our exclusive bonus insight. This feels particularly relevant for newcomers or even just people interested in the sector without wanting to, buy a tractor.
Right. We're talking about exchange-traded funds, ETFs, focused on agriculture.
Explain what those are exactly.
Okay, so ag ETFs are basically investment funds traded on stock exchanges, like stocks. They hold a basket of assets related to agriculture.
So instead of buying one company's stock, you buy the ETF and get exposure to many.
Exactly. They might invest in companies that grow crops or companies that make fertilizers or farm equipment or food processors. Some even invest directly in commodities like corn or soybeans.
So it's a way to invest in the growth of agribusiness without actually running a farm yourself.
That's the idea. It offers diversified exposure.
Sounds appealing. But the sources warned they aren't all the same. What should you look out for if you're considering an ag ETF?
Several key things. First, the expense ratio. That's the annual management fee. Lower is generally better, means more potential return for you.
Okay, fees. What else?
Second, understand the index the ETF tracks. What's actually in it? Is it broad agribusiness? Just fertilizers, just commodities. The index determines what you're investing in.
Makes sense. You need to know what you're buying.
Third is diversification. How many different companies or commodities does it hold? More holdings usually means less risk tied to any single one.
Right. Don't put all your eggs in one basket, even within the UTF.
Exactly. And finally, look at the performance history. Now, past performance doesn't guarantee future results. We always have to say that.
Of course.
But reviewing the track record gives you some context on how it's performed in different market conditions.
The sources gave some ticker symbols as examples to start research, right?
Yeah.
MOO, SOYB, DBA, JJA, RJA.
Yeah, those were mentioned: Venek Agribusiness, Tucrium Soybean, Invesco, DB Agriculture, and a couple of ETNs from iPath and Rogers.
But the key is, these are just starting points.
Absolutely. You must do your own homework. Check if an ETF aligns with your own investment goals, your risk tolerance. Don't just pick one off a list.
And what about mutual funds? Do they fit in here?
They can. Some mutual funds invest in agriculture, but often as part of a broader strategy, maybe alongside other sectors, and they might have higher fees. So for purely focused ag exposure, ETFs are often a more direct route.
Okay, that's a really practical insight. So wrapping this up, it's clear the agribusiness sector is, well, incredibly dynamic. Lots of opportunity, but also real challenges for newcomers.
Definitely. Getting a handle on that global demand, the power of new tech, the supply chain knots, the sustainability push, and the consolidation trends, that's fundamental if you're thinking about getting into farming.
We really hope this deep dive helps you explore those trends further. Maybe research some of the companies or ETFs we touched on as a next step.
It's a fascinating space.
It really is. And maybe a final thought to leave you with. The world needs to figure out how to feed billions more people sustainably. It's a massive challenge.
And the innovation and adaptability within agribusiness will be absolutely critical to meeting it.
So the question is, what role will new farmers, new ideas play in shaping that future? Something to think about.
We hope this exploration has been valuable. Thanks for joining us on the Deep Dive.
Hitting that like button and smash that subscribe.